Tesla stock rose by 5.3% on Wednesday, closing at $656.57. It was even trading at $675.70 per share on Thursday, after Tesla CEO Elon Musk tweeted on Wednesday night that Tesla investors might get preferential treatment to purchase shares of SpaceX-owned satellite internet. With these positive updates, the automaker effectively surpassed its peers in the S&P 500 and the Nasdaq 100. Its upsurge even caused the Nasdaq to jump to an all-time high on Wednesday. Tesla stock hasn't been doing much in the past several months, and so this video is meant to show you why Tesla stock might be starting to gain some momentum. For one, the electric automaker has managed to feature 2 of the top 3 vehicles in Cars.com's 2021 American-Made Index, a list of vehicles that contribute most to the American economy. Tesla sneaked its way to the top of the list, with Model 3 grabbing the first spot and Model Y becoming third on the list of most American-made cars. A survey by Cars.com gives a clear indication that Tesla's roots in the United States may be valuable in the next coming years, thanks to US President Joe Biden, who has pledged to support local companies that create job opportunities for Americans. The current administration in the US is also pushing for the adoption of electric vehicles through new incentives and tax rebates. Tesla could greatly benefit from these. Tesla stock could also have jumped by 5.3% after the company's charging team in China announced earlier this week that it had rolled out a solar-powered supercharger facility with an on-site power storage in Lhasa, administrative center of Tibet. Integrated with Tesla Powerwalls and a solar panel canopy, the Tesla supercharger facility in Lhasa is one of the first on the territory of Tibet. The news of Tesla's launching solar superchargers in Lhasa came not long after the company announced that it had commissioned its longest supercharger route from east to west of China. Moreover, Tesla's been expanding its supercharger presence in the country by opening new charging stations there. Last week, Tesla announced it had effectively deployed more than 840 supercharging stations in China. This shows that the automaker's focused on increasing its impressive infrastructure of exclusive EV charging points. Tesla also plans to unlock some of its supercharger networks to other electric vehicles in Germany. Recently, we have already reported about Tesla's having been urged by the German transport minister to set up universal, all-electric charging stations in the country. The company has also announced that it intends to open its supercharging stations to all-electric cars in Norway and Sweden, regardless of the manufacturer. It would be monumental for the EV maker to unlock its extensive supercharger network to other automakers. Not only will this enable other EV drivers to access more charging options, but also enable them to switch to electric powertrains, as charging infrastructure will be more available than ever before. Tesla's momentum on Wednesday is also attributed to a recent study by consulting firm Ernst & Young, which predicted that EV adoption in Europe could hit a tipping point as early as 2028 or maybe 2033. Previously, Ernst & Young had set 2038 as the point of inflection for electric vehicle adoption, according to a report from the Wall Street Journal. This sentiment was shared by Piper Sandler, with analyst Alex Potter predicting that global EV adoption may exceed 50% of the market share by 2035. Tesla stock is also rising because of the support the company is nowadays getting from a local news outlet in China. Recently, People Auto Market, an online subsidiary of People's Daily, China's largest newspaper, stepped forward to debunk false reports and unfounded rumors posted online about the company. The newspaper could help Tesla rebuild its reputation in the country, an operation that looks challenging but well worth doing. Tesla's legal department in China has also adopted an assertive stance against smear campaigns. Last month alone, a couple of news outlets came out to admit that they had posted negative news about Tesla based on zero evidence. Some bloggers have also posted retractions to videos accusing the Tesla Model 3 and Model Y vehicles of having defective brakes. Even the Model X owner who stormed the Shanghai Auto Show has admitted that her brake failure claims were made up. Aside from this, Tesla reached another milestone this week after it had announced that it has achieved production capacity for the second quarter of 2021, even though there are still 2 months remaining in the business period. Until now, it was expected that both the refreshed Tesla Model S and Model X would experience delays due to supply chain issues like a global chip shortage that's still apparently happening, but recent rumors suggest that the Model Y and the Model 3 have been sold out for the second quarter. With the second quarter already sold out, that means the demand for Tesla's electric cars is still very strong in the US and the UK. In the first quarter of 2021, the automaker was able to deliver impressive figures, despite the Model S and Model X production being halted at the Fremont factory. Considering that the two flagship electric vehicles are joining the fray in the third quarter, Tesla stock may witness higher trading volumes as investors and Wall Street brace for the company's impressive second and third quarter results. In a separate story, Tesla battery partner Panasonic is reported to have sold off its entire stake in American electric car maker. The Japanese company sold its Tesla stake for an insane profit of approximately 400 billion yen, $3.6 billion. As of the end of March 2020, the Osaka-based manufacturing giant held over $730 million worth of Tesla shares. Tesla stock saw a remarkable five-fold growth over the 12 months that followed, allowing Panasonic's investment in the automaker to record some good returns. Panasonic originally bought approximately 1.4 million Tesla shares at $21.15 each in 2010. These shares were bought for around $30 million. As reported by Bloomberg, Panasonic spokesperson Yayoi Watanabe noted that the Japanese conglomerate's move to offload its Tesla stock does not affect their business relationship in any way. The company plans to continue supplying Tesla with cells and is working with it on next-generation 4680 battery cells. Our relationship with Tesla as a business partner will not change going forward, Watanabe said. He also noted that the proceeds from the sale of Tesla stock would be used to fund new investments. This will include procurement of artificial intelligence software developer Blue Yonder, a deal that's estimated to take a whopping $7 billion. According to Mr. Watanabe, the Arizona-based company's software would certainly be used by the company to analyze its site operations for inefficiencies. Better efficiency in manufacturing operations will likely boost Panasonic's ability to generate more revenue, according to the company's new CEO, Yuki Kusumi. Panasonic has embarked on a 2-year mission to produce more battery cells for the automaker and share the free billions of dollars to invest in new areas of growth. In a recent interview with Bloomberg, Panasonic CEO Yuki Kusumi noted that if Panasonic's prototype 4680 cell line proves successful, the company would greatly increase the number of battery cells they make and supply to Tesla and other car makers. Kusumi also noted that Panasonic would be focusing a lot of its efforts on increasing the number of battery cells that it produces for Tesla, and it would ensure its production costs are as low as possible. This should allow Panasonic to protect its long-term battery deal with the electric car maker, while keeping competitors like South Korea's LG Energy Solution and China's CATL at bay. Within our new structure, we're going to polish this ability, and if you stay tuned, we'll invest again in building supply capacity, the new president and chief executive officer said, noting that the EV battery business would be crucial for Panasonic's growth in the coming years. It's worth noting that Panasonic is also working with the automaker at its Gigafactory in Sparks, Nevada, and previously it supplied solar power products for the company's Buffalo, New York plant before it was closed in 2020. Following this news, Panasonic shares rose as much as 4.8% in Tokyo on Friday, while Tesla stock, which jumped to 743% in 2020, closed at around 3.5% higher in the United States on Thursday. Meanwhile, the global market for electric vehicle battery cells is expected to hit approximately $35.4 billion by 2023. If you enjoyed this video, make sure to check out these videos shown on your screen right now.